That was a very strong breakout on euro dollar over the last 2 weeks, and we believe that it's slowly losing steam and that it could be retracing over the next few weeks. That should help European equities, which have been underperforming, and they could see their acceleration over the coming month. We'll first look at euro US dollar. We're looking at it on our Fingraphs platform on a weekly basis, 1 point per week, or the perspective over the next few quarters. As you can see, the move from December 2016 has been very strong, but it has remained in what we believe is a correction for now. It has now reached the upper end of our corrective targets, which should provide a level of resistance. So we could see some work here over the next few weeks, possibly months, before it may accelerate up again. The oscillator, our risk index, is still in the middle of the range, so could justify that following some consolidation, your US dollar may move higher over the next few quarters. Now moving to the daily chart and the perspective over the next few months, we can see that our impulsive targets have been reached and that the price actually extended above them, and that now our envelopes are touching each other, which is a sign of market stress and of exaggeration. The risk index is also very much overbought and hasn't quite turned yet, but seems to be likely to do so over the coming days. So also here, we would probably expect a few weeks of consolidation to the downside, at least sideways consolidation. Now looking at the hourly has had also quite a tremendous run. It also made it into our impulsive targets up, somewhere between 123 and 125. Our envelopes are touching each other, which is also a sign of exaggeration. And our risk index did make a top in the overbought zone and has been reversing. It seems that it wants to retest a bit over the next few days, but following that, we do believe that it will confirm a reversal or at least an intermediate top. So looking at all three together, the weekly is still in an uptrend, which is still corrective for now. It is now hitting against the resistance of the upper end of our corrective targets. The risk index at the moment is still trending up, and following some work over the next few weeks, months, it could continue up over the next few quarters. The daily has reached its impulsive targets up and above and seems to be in an exaggerated position at the moment, so would also justify some retracement. And the hourly also seems to be exhausted, having reached its impulsive targets up and having reached the overbought zone. Now we'll also look at cable, because cable was interesting. It also came up quite aggressively into its corrective targets up. The upper end is slightly higher, but it did make it up very rapidly from the 135s, 136 up to the 143s. The risk index is still quite low, which could mean that there is more potential over the next few quarters. That said, on the daily chart over the next few months, we could see that we are now overbought on the risk index. Our envelopes are touching each other, which is a sign of exaggeration, and our impulsive targets up have been met. So we would be somewhat stretched and could also expect some kind of a short-term retracement here, possibly over the next few weeks, months. Looking at the hourly, that retracement is probably already underway. We had reached our impulsive 2 extended targets. The risk index was overbought and our envelopes was showing a lot of exaggeration, and this consolidation is could possibly last between 3 to 4 weeks. So looking at all three together, it's still a bull trend at the moment. On the weekly, a corrective bull trend. We've reached our corrective targets. The risk index seems to imply that following some retracement, there's more potential behind it. The daily seems exaggerated and the uptrend seems exhausted. It's also overbought, so also an exaggeration. And the hourly may be starting to reverse to enter a retracement period, which could last over the next few weeks. So looking at that, usually a weak currency is good for the stock market, and we could look at the S&P 500, which has really been flying over the last 4 to 5 months. It has now reached above the upper end of our impulsive targets up. We could calculate impulsive 2 targets, but we believe that at the moment, with our risk index in the overbought zone, we would rather enter a period of consolidation at high levels before perhaps we could accelerate up again during the second quarter. If we look at the daily chart, it is also onto an exaggeration. It has reached its impulsive 2 targets. Our envelopes are touching each other, and our risk index is in overbought. It has not quite turned yet, but should be doing so over the coming days. Finally, the hourly is also very much extended, also an impulsive 2 targets. The risk index perhaps has a slightly bit more to go before it is really overbought, but we're slowly getting there. And so what we could say is that although we are still positive on all 3 frequencies and we are still in a potential continuous uptrend, all 3 charts show some exaggeration, and we would expect not a strong reversal, but at least some consolidation at high levels over the coming weeks, perhaps the coming 1 or 2 months. Now, if we look at Europe, the situation is slightly different. This is the weekly chart, and we could see that since the dollar has been very weak and the euro very strong, it hasn't done much since May, and you can see it has described or done a consolidation pattern, and it seems quite compressed at the moment, and we believe that when it gets going, it could be quite strong. And we can see that the risk index still has some place to move up towards the overbought zone, and that our targets are showing the potential above 4,000 up to 4,400, and that's another 10 to almost 20% above current levels. So that's quite strong potential in Europe over the next 1 or 2 quarters. Now, if we look at the daily, we can also see quite nice potential here, possibly up to 3,800, possibly up to 3,900 almost. So that's also very good potential over the next couple of months. We are in a bit of exaggeration, so we could work a bit here, but believe that during possibly the month of February, Europe could probably make a nice move up. Now, on the hourly, we've reached an intermediate top here last week. We're consolidating. This consolidation could probably last another week or so as the risk index come back pretty much towards the middle of the range. But we believe that following that, it will start to reaccelerate up again. The targets short term are still showing a bit of potential up, but for some more decent opportunities, we will be looking at Europe over the next few months on the daily chart and over the next 1 or 2 quarters on the weekly chart. Europe is also still uptrending on all 3 frequencies and seems to be less extended than in the US. Hence, our call for more potential in Europe than in the US. Thank you very much and have a good week. Bye-bye.